Yo, what's good, guys? This is Tyler, and I wanted to start a new series on this channel that I think will be helpful for both you and for me. It's going to help me, obviously, just get more mental reps in. It'll be a form of back testing for both of us to be able to kind of see how the silver bullet strategy is actually performing from a purely objective and rule-based approach. And honestly, just keeping it as simple as possible because we're not worried about any news bias. We're not worried about looking at any daily or higher time frame draws on liquidity. Obviously, these are elements that we can add to this strategy to help make it more accurate, day by day. And I will make videos on this, but for the time being, what I would encourage you to do is actually go back and look at the live trading sessions that I'm doing every single day with our Discord, and you'll see in those videos that I incorporate those other elements to the strategy to help it become more accurate and to give us a little bit of a bias on top of just trading the strategy obviously straight up, but just taking the strategy at a surface level and then just going back day by day. I think it's going to be really helpful for, like I said, both you and for me to be able to just back test this and see how this actually is performing, week in and week out. So without further ado, we are going to go ahead and backtest the silver bullet strategy both on ES, the S&P 500, and NQ, the NASDAQ 100, over this last week. And if you guys enjoy this video, then I will definitely make it a habit to do this every single week. I just want to focus mainly on NASDAQ and the S&P 500 using this silver bullet strategy, and just to give you guys and to give both of us really more mental reps with it to just hopefully sharpen our edge come the following week as we're looking to trade this strategy in the live market. So without further ado, let's just hop right in, and we're gonna actually go all the way back to Monday to start the week off. Obviously, guys, for this week we had a lot of news. We had CPI news, we had unemployment claims, we had PPI, we had consumer sentiment. So we didn't have any news at all Monday or Tuesday, but we had news on Wednesday, Thursday, Friday. So we see a ranging market for the early part of the week, obviously, as you guys can see. And then as we get into Wednesday, you guys can see the volatility picks up pretty noticeably. So we'll just go ahead, guys, and we're going to jump over and mark up our 9 a.m. Central candle on Monday. And let's actually go ahead and just do that for every one of these days really quickly, so that way we can just quickly navigate right to the candle and then go from there. Perfect. So we're all set, and what I want to do, guys, is obviously going day by day. I want us to go back and look at these markets as if we were obviously going to be looking to trade them live, and we're going to pretend that we're not looking for any higher time frame bias. We're not looking for anything like that. We're simply looking for the exact strategy, which is having no bias, waiting for a super liquidity, getting a displacement, fair value gap entry, 4-point stop loss, 4 to 5 point stop loss, just depending on where the stop loss is. And I'm going to show you guys why that might vary if we get an example, but we'll just say 4-point stop loss, okay, just to make it easy. And then a 5-point take profit 1, and then obviously go from there. And then for NQ, what we'll do is we will do the same thing, but instead of looking for a 4 or a 5-point stop loss, we're going to look for a 15 to 20-point stop loss. And that's just because there's way more pips or points inside of obviously trading NASDAQ than there is relative to trading the S&P 500. So hopefully that makes sense. But let me note down in the comments if you guys do enjoy this video format, and we'll continue to pump these out. So without further ado, let's just dive right in. So let's actually jump over here, guys, to bar replay mode. And what we can do is we'll drop down to the 1 minute, and we'll actually just plan and to play this out in our heads just like we would be looking at it in a live market. So that's why I want to jump into replay mode, so that way we don't see anything that's already happened to the right, and we can actually give an honest assessment to just trading the strategy straight up without anything else mixed in with it. So as we're coming into 9 o'clock, we can see that during this macro time and price, 850 is right here, so we do see a run on liquidity right here. We took a low in this macro, and now we're coming up to 9 o'clock. So let's just play this out one candle at a time. And we see price pushes up. We grab some buy side liquidity. So we've got a sweep of liquidity right here. So let's draw this across. Boom, sweep of liquidity. But now do we get a fair value gap in order to take a trade? So that's what we're waiting for right now. And we don't really see anything to speak of just yet. We do see a fair value gap right here. So let's just go ahead and mark this up. Fair value gap. Short position. Boom, right there. 4-point stop loss is perfect because that will still put us above this high. Now, in an example where, let's say a 4-point stop loss didn't put you above the high, but a 5-point stop loss did, then at that time, you might as well just do a 5-point stop loss to give yourself that extra protection. But for this, we'll be able to just leave it at a 4-point stop loss, 5-point take profit 1, and then obviously you can look for further take profits after you get to a take profit 1. So the very next candle comes in and it touches to the tick the exact high of this wick. So maybe you entered off of this as you saw it come back and retest the same exact point of that gap, the very open of that gap. Or there's a small chance that you would have obviously waited and wanted to see a little bit more of a push into the gap. So we'll pretend and play both, right? So we'll pretend that you got an entry right here as price came back. You market executed because you saw it come right to that gap. Boom. Price almost got to TP1, not quite. Still not there. Now price taps into that gap. Let's see, chopping around. Boom. Finally, TP1 gets hit. So at this point, you've partialed or closed fully, but we'll say you partialed and you went stop to break even. And now let's see if it stops us out at break even or if it gave an even bigger move. Okay, great. So boom, stopped out at break even and you're good to go. For Monday, you could be just done trading. Or let's see, we're still within this hour, right? We're still within the silver bullet hour. So let's just pretend that maybe you wanted to get a second trade. So let's actually just keep this on the chart for now so we can reference it. But here we see now we've swept liquidity here and here. And we've got displacement here, displacement here. So let's actually mark both of these. And we'll just see where we get any sort of reaction from. And we'll pretend that you are going to enter right off this first one, just for sake of the video. Let's do 4-point stop loss. That's great, puts you right below this gap. 5-point take profit 1, and we'll see what we get. Price comes down to that gap. Still nothing yet, but we are in profit. Boom, TP1 gets hit. Great, awesome. So there you go. Take profit gets hit. Either way you played this. And then from there, looks like you got stopped out at break even as well. So great. 2 TP1s. And then that was all she wrote for Monday. Awesome. So now let's fast forward on over to Tuesday, which is the day right before CPI. But yeah, both of these days were pretty rangy markets. So wasn't really anticipating any sort of like big swings. But just in case, wanted to obviously play it as if, it was still a possibility. But coming into Tuesday now, still expecting another rangy day because there's absolutely no news. Drop down to the 1 minute. Let's get on all the way over here to 9. So 1 minute before 9, we see during the macro, price is grabbing these highs. Gets a high here, gets a high here. So now let's wait and see if we get any sort of reaction with a fair value gap to the downside. So do we get a gap here? Yes, we do. There is a gap right there in this candle. Short position, 4-point stop puts you above the high. 5-point TP1. Let's see what happens. Price comes and triggers our entries. Wow, clean trade, TP1. This could be extended TP for TP2 this low, which would be 8 handles. We're risk-free. So here you probably got stopped out at break even. Let's see what it does after this. Yeah, you definitely got stopped out at break even after this point. And honestly, you'd probably be done, especially since it's rangy and you know that yesterday was a range, today was a range, and then we're the day before CPI. But just for sake of the video, 10 a.m. right here, you see another displacement. You don't really see a super convincing sweep of liquidity by any means. This came down and it grabbed this low. Obviously, we've already taken this liquidity. So yeah, just for sake of the strategy, why don't we just go ahead and mark this up. 4-point stop loss. 5-point take profit 1. And let's just see if this trade activates as well. So here you got entered in. Oh, and yeah, it actually would have hit TP1. You'd have had to hold it just a little bit past this silver bullet hour, but it ultimately did come back and hit for a take profit 1, and then you would have been stopped out at break even. So Monday and Tuesday, both the same story really. So let's get on over here to Wednesday. All right, so here we are for CPI day, and we see that price obviously has reacted pre-market with the news, dropping down to the 1-minute time frame. Let's get on over here to 9 o'clock. And again, guys, this, based on what we go over in this video, might be different than how I actually traded it, or we actually traded it with our Discord, which is why I would still encourage you guys to go watch the live sessions so you can see like kind of my entire thought process. But again, just for sake of this video, I want to pretend that we are only looking for just these principles and nothing more than these principles, right? So here we go. We're coming into 9 o'clock. We see price pushing up, and we see a run on buy side liquidity. We wouldn't be looking to get long necessarily just yet. We did take this sell side liquidity and we're displacing, but there hasn't been any fair value gaps that we would have been able to enter off of, right? So price pushing higher. And even if there was a fair value gap, odds are you could probably have gotten maybe 5 points, but you probably are not buying this, right? Like, you are not entering right here. I don't think in any universe, you're taking along at this point. I don't think that, right? So, let's be realistic about it. But here we go. We've taken buy side. We're filling imbalance. And really at this point, we're kind of just waiting for some displacement to really give us any sort of indication that price is ready to make a move. So here we go. We get displacement right here. Fair value gap left behind. Short position. 4-point stop loss still gets us above the 3-candle fair value gap sequence, so I'm okay with that. 5-point TP1. 5-point take profit 1. Here we go. We get triggered in. Boom. Take profit 1 gets hit. Maybe for take profit 2, you do like this structure right here, which is 10 handles, so 1 to 2. Actually, it's a little over 1 to 2 because we did a 4-point stop, but that gets hit a couple candles later. Great. So TP3 would be, let's say, this low, 18 handles. We're risk-free at this point, so we don't really care what happens, but boom, that gets hit. And then if you wanted to target the CPI low as well and just hold a runner, play this out. Boom, that got hit as well. Amazing. So CPI, an amazing trade using this strategy. Now let's go over to PPI for Thursday. Drop down to the 1 minute. Let's get on over here to 9 o'clock. But so far, just going off of purely the strategy, no news, no bias, no anything like that. This has been extremely, extremely effective, right? So here we go, coming into 9 o'clock. Nothing really to speak of just yet. Nothing really to speak of. Here we got some lows being swept to the downside. Finally, we get some displacing price. We've got a fair value gap on this candle. Let's see what this next candle does. Boom. Very energetic, very obvious fair value gap right here. And just because obviously this is only yesterday at this point for me, you could enter right at the beginning of this gap. You could do that, and you could do a 5-point stop loss. However, this is what I did for this trade specifically. I'm going to tell you what I did specifically, but then we'll actually play this like we anticipated, all right? So what I did was the 50%, so that way I could still have my stop loss below this low, and it was still less than 5 handles. My stop loss was about 4. I want to say my stop loss was 4.5. So I was within that 4 to 5 handle range for my stop loss. And the reason I'm sharing that detail with you guys is simply just so you guys know, if you ever see me make a video where I use a 4-point stop loss or a 5-point stop loss, or you see like some random number like 4.5 or something, that is the reason why. It is setup by setup basis, but your setups, you should always be able to use a 4 or 5 handle stop loss at the absolute maximum. Use your brain, use your knowledge, use some common sense, protect yourself. But let's just say, you know what, we'll say we entered right at the beginning of this gap, and we'll say that we just did a 5-point stop loss just because we weren't going to be able to get below this low anyway, and we just said, okay, we're going to do 5 points to give us some breathing room, understanding that there obviously is a fair value gap down here as well. But so let's see how this plays out. 5 handle stop loss. Or I'm sorry, five handle stop loss, 5 handle take profit 1. Let's see. Price comes back and triggers you in. Let's see if it hits stop loss. Gets close. Does it hit it? It's so close. Technically doesn't get hit. It technically doesn't get hit, even if you entered off the beginning of the gap. Like I said, we entered on our session halfway at the 50% of this gap just to improve our risk to reward. So it was really, really clean, and our TP1 ended up being somewhere up, like right up in here because of that. But that's neither here nor there. Either way, take profit 1 gets hit. Even using this setup right here. So at this point, now you're looking for further TPs. So this would be TP2, a little over 10 handles. Your stop to break even at this point. Boom, take profit 2 gets hit. Maybe you see this high, right? So TP3 is up here. You're still risk-free, obviously. Let's see, do we get break even or TP3? Boom, take profit 3 does get hit right there. And then I believe from this point, we got stopped at break even. If you were still holding for a runner, it makes a huge wick down. Yeah, right there. So you'd have been stopped out at break even right at that point. But then price does, I have the benefit of hindsight, obviously, at this point. But price does end up actually coming up and grabbing this wick right afterward. It spent the entire rest of the day going up and attacking these highs. But this is all stuff that we talked about like on the session and stuff. But just based on the strategy alone and just the principles, no other bias, no other anything involved, not even caring how the news was released. It doesn't even matter. This was the setup. So far, this is actually undefeated. Just going off of pure just pure principles. That's amazing. That's incredible. So let's get on over here to today, which is Friday, last day of the week for the S&P 500. Coming into 9 o'clock, looks pretty ugly. Price starts to come alive here with market open. Let's get on over here to 9 o'clock. So here we see with this macro that price, it doesn't really do much. We did have consumer sentiment come out right at 9 o'clock as well, but all we've seen is price pretty much sell off. So here we go. Price at 9 grabs this low, but we don't get any sort of displacement or anything higher. If anything, price is just continuing to work lower. We see price start to move a little bit, but at the end of the day, not really any sweeps of liquidity, no displacing, no fair value gaps. If anything, now we see price moving down, but there hasn't really been a sweep of buy-side liquidity. So based on purely the principles, tough to say you would have wanted to get short in here. We're just continuing to move lower and lower and sweep sell-side liquidity. But here would have been a gap to get short in. But again, that's not a gap. I don't think you're going to get short there if I'm being just truthful and honest. But here you go. Finally get some displacing price. Gap right there. We'll say entry right there. 4-point stop loss puts you below this low, so that's perfect. 5 handle take profit 1. And again, I have the benefit of hindsight for this trade. So you do like 1 tick obviously below. 4-point stop, 5-point TP1. So boom, see what we get. Price triggers in. Drawdown coming close to the end of this silver bullet hour. Price goes up and just barely taps that 5 points. And depending on the entry, maybe your take profit gets hit, maybe it doesn't. Just full disclaimer for this trade, mine didn't get hit. Because I was 1 tick was the spread. My TP never did get hit, but I did remove my risk because I was 1 tick from take profit and I wasn't willing to take a loss after being so close to take profit. But benefit of hindsight, price does sell off. And that was really it. And moral of the story is you ended up being the setup. So this fair value gap was what would have given you the best optimal trade for the day, just because price does continue to just push lower from that point. Even from here, it just continues to push lower even into PM session. So all good. So I guess you could say Friday. You could say undefeated week. Technically, you could say undefeated week because this did offer a 5-point move. So yeah, undefeated. And if anything, break even day for Friday. I'm definitely not going to count it as a loss. Friday was definitely the worst day for this strategy on the S&P 500. But as promised, really quickly, guys, why don't we just go ahead and go to NASDAQ and let's do the exact same thing. All right. Same drill. Drop down to the 1 minute. And remember, no news bias, no anything. Just purely off of the strategy and the rules alone. No SMT divergence, no nothing. I just want to see if you could use this same pure principles on NASDAQ. So boom, price displacing higher in this macro. So 850 is right here. And we see price make 1 push down. So maybe you say, okay, here's our sweep of liquidity right here. Taking this low. And now we see price displacing up. So we'll keep an open mind to every possible scenario here. But we see price displacing. Do we see a fair value gap? Yes, we do. Fair value gap right here. And remember, we're going to do 15 points. Or in some cases, you could go to 20, but we'll go 15. ICT says that 5 handles on ES is equivalent to 20 handles on NASDAQ. So that's what he says. That's what he says. I would prefer to use a 1-to-1, truthfully, but just for sake of argument, let's go 20 handles. And you guys can backtest this using 15 handles if you would like to, but we'll just do what basically ICT talks about, since he created the strategy, and we're looking at NQ here. So let's see what happens. Price comes down, triggers us in. Choppy day so far, but again, we're in that rangy first couple days of the week. And yeah, so you would have been stopped out, and it looks like it offered a less than a 1-to-1 going off of a 15-point stop loss. So not good there, but that's where we're at on NQ. So S&P 500 won that day, and then NASDAQ did not. Just looking at this, I don't really see any areas where you would have shorted or gotten short either. If anything, I think you would have gotten long in this candle, in this fair value gap here. Either way, I think it would have resulted in a loss. So yeah, just absolutely no go for NQ, I would say, for Monday. Just for sake of argument, we can mark up this fair value gap right here on NQ. There's a fair value gap right here. Ideally, I would like to see the one that lines up with structure and that is in a discounted or a premium price range if I'm getting short. So we'll just see, just for sake of the video, 15 handle stop loss, 20 handle TP1. This triggers in and also hit stop loss. So yeah, not good. Not good for that on this day. Yeah, I'm just looking at price to see if we would have played it any different. I really don't think you are, if you're actually just sticking to purely the rules and nothing else. So that's what I would say to that. So now let's get on over here to Tuesday, day before CPI. Drop down to the 1 minute. All right, so here we go. Coming in at 9 o'clock during this macro, we can already see that price is taking this high. Wow. Really taking that high. Very energetic. This is the day before CPI. But again, guys, we're only going off of the rules. Liquidity sweep, displacement, fair value gap entry, right? So now we want to see price start to displace. We've already taken buy side. Do we get a fair value gap in this candle? Yes, we do. Fair value gap right there. $15 handle stop. Puts us right at that high. If you care to, you could do one more tick or two more ticks to get you above the high. All good either way. We'll just put it right. We'll put it right there. And then 20-point TP. So either way, you're over a 1-to-1. So price does trigger in right here on the very next candle. And then boom, TP1 got hit. 20 handles. Let's see if we go for lower lows. This is now 33 handles on NASDAQ. We're risk-free. Boom, stopped out at break even after take profit 1. All right, great. So Tuesday ends up being a winning day. Now that we've taken this low, you could see, however, that price does displace up right here. And there's a fair value gap here and here. And just for sake of the argument, let's do the same thing here. Let's see if there's a play towards the end of this hour, playing off of this gap right here. Long position, beginning of the gap, 15. Maybe you do 20 handles on this one. But you don't even have to do 20 handles because you could go right at these lows, puts you at 17.5. Again, you're still doing a 20-point TP1, so you're still over 1-to-1. Boom, triggered in. And you do get stopped out. So, yep, you would have wanted to be one and done. And that's what I'm finding for these setups, even in my own trading, guys, is that I'm not really trying to find multiple trades in that hour in the sense of, like, if I win my first trade, I'm not trying to just continue forcing trades in that hour. And that's what's worked for me. And it's helping me not over leverage, not over trade, and, you know, not be conflicted with my bias and confuse myself and take a bad entry. You know, I'm trying to limit those things and limit those possible things in my trading that could hurt me and hurt my trading account ultimately at the end of the day. So that's what my advice would be as far as that goes. But getting here to CPI day now, Wednesday. Again, only going off of purely the fundamentals. So we took a short on the S&P 500, obviously. But now looking at NASDAQ, let's see if we see anything similar. So we see price taking buy side right here with the macro. Boom, price comes up. Still pushing higher. Takes this buy side now. Still, again, just waiting to see displacement to the downside in order to get short. Nope, no gap there. Still nothing. Finally, you get a pretty dang huge fair value gap, especially talking about NASDAQ. But let's stick to the rules. Let's see. So let's pretend that you got short right inside of the beginning of this gap. You ideally wouldn't want to do that, and here's why. Let me tell you why I wouldn't. Is because even if you did a 20-point stop, you're still inside of the gap that you're entering from. Ideally, you at least, at a bare minimum, want your stop loss to be at least on the other side of that gap. So what I would do, no matter what, this is just me personally, what I would do no matter what is I would do 50% of this gap. And then I would just do 20 points right here. So at least nothing else, I've got as much protection as I can get out of the trade, if that makes sense. Okay, so again, we're kind of in uncharted waters here as far as like looking at this with NQ versus ES. So we're learning, both of us, as we go here. So, but let's get this to 20. There we go. 20 handles, see if we get a pullback. So it pulls back to the entry of that gap. Does it tap in the 50%? Yes, it does. Taps in the 50%, even works up a little bit higher. Does it hit stop loss? No, it doesn't. Take profit 1 gets hit. Amazing. You could even say this was a potential take profit 2, but realistically, you're probably going for at least this structure down here, which would be 42 handles. So let's see if it gets there. Yes, it does. Here's your next take profit, or that's where my next take profit would be. We're risk-free, obviously. Boom, that gets hit. And then all that's left related target is the low from CPI. So it looks like price came really close, but it never quite got all the way down here. But either way, great trade on CPI for NQ. And now finally, getting on to Thursday here. Let's get as close as we can, save some time. 1 minute. Here we go. So price right before 9 o'clock, we can examine what price did with the macro. And with the macro, it looks like we did sweep this low. So we could be playing displacement right away in this hour if we got it to the upside. Otherwise, if we get a sweep of buy side liquidity, we could flip our bias. More sell side getting swept right here. Potential, no gap right there. All right, so you have a small gap right here. Not the most convincing gap, but we're just, again, going off of purely the principles. 15-point stop. 20 points wouldn't put you below that low. So for me, I'm totally fine just doing 15 points. That's how I would take the trade personally. 20 handles for take profit 1. Let's see. Triggers you in right here on this candle. Drawdown, stop loss. If you did 20 handles, let's see if that makes any difference. No, it does not. So that's a losing trade no matter what. And we'll just say, for sake of the video, let's pretend that you decided that you wanted to also trade this gap right here. Maybe you look at this wick up as a sweep of liquidity there, and you want to get short here. And again, I'm going over this. I didn't take these trades obviously, but I'm just going over this, trying to be as transparent as we possibly can be, not trying to give you guys best case scenarios or anything like that. Only going off of purely just the principles. With SPX, obviously, it was literally perfect this week. And for NQ, it's been a little bit more hit or miss. And let me know if you guys agree so far that I've made it this far in the video. But we'll see if this plays out just for sake of the video. Does not play out. But we are still right in this 10 a.m. window. So now again, you could flip your bias again. Some would call this over trading. I would probably agree. If I took 2 losses back to back, I would not trade anymore probably. But hey, for sake of the video and just for sake of the strategy alone, this is the benefit of backtesting. So we'll do 15 points, just like so. 20-point TP1. I already know what most of you guys are thinking. You're thinking, I'm not doing this on NQ. I'm only going to do it on ES. And there are days, guys, where we take NAS over ES. It all just depends on all the other things that you can factor in. Bias, draws and liquidity, SMT divergence, all that type of stuff to help you with that. But yeah, I would say for the most part, if you just wanted to go off principles alone for now, it looks like ES has been behaving better. And yeah, that's another stop loss regardless of how big. So yeah, this would have been a 3 losing trade day on NQ if you were trying to just get all these. And at this point, like, I would pray to God that you'd be done trading for the day after 3 losses back to back to back. So one final day here, Friday, to go over. Drop down to the 1 minute. So here we go. Right before the macro. Or I'm sorry, right before 9 o'clock in this macro. Obviously, same story as SPX as far as we're waiting on the news release. Consumer sentiment, we sweep lower. Now let's wait and see if we get displacement to the upside now that we're sweeping sell side liquidity. No gap there. Nothing yet. More displacing price down, but there hasn't been any sweep of buy side liquidity, so I wouldn't anticipate getting short in this gap. Doesn't look like price is returning to it yet anyway. It did just return to it right there, but again, no sweep of buy side liquidity in my opinion, so I wouldn't be really looking to play that. If anything, now what I'm seeing is that we've got a fair value gap right here. So this would be kind of the first opportunity based off of if you waited for a true liquidity sweep, displacement, fair value gap, this would be what I would recognize right down here. So boom. Looks like this is actually perfect. So we would do 15 points still. That's still the bare minimum. And it's nice because we're below that low, so it works out perfect. And then 20 point take profit 1. See what happens. Price does get triggered in for the entry. And then we do go take profit 1. Amazing. Maybe this could be take profit 2, which also gets hit. These highs right here. Let's see if it works its way back up to this high. It does not. You got stopped out at break even, and you're after the 10 a.m. hour at this point. So this entry would have came on NASDAQ right at the tail end, literally 2 minutes before the 10 o'clock hour. But that's still within that time range to look for entries, guys. So all in all, it was an interesting case study between ES and NQ. Ultimately for this week, obviously ES performed a little bit better, but there's definitely times where I would say that it does pay to trade NQ versus ES, whether it might be because the move is a little bit cleaner or because the move is going to give you a bigger move based on SMT divergence, draws on liquidity, or things like that. But hopefully this was helpful for you guys. It was definitely eye-opening for me to see it, kind of just going off of purely principles all week long. When I'm trading it live, I'm going off of everything. I'm going off of bias. I'm going off of news and all that. If you guys are interested in being a part of those sessions, if you go down to the description, I'll have a link where you guys can check out the Discord. If it's for you, great. If it's not, that's all good too. But hopefully just this video can serve as a great tool and a purpose of educating you guys and helping you guys with your trading and helping you guys with the strategy. That's ultimately what the goal of making this video is for. So if it was helpful, it would be awesome if you guys would consider subscribing, liking, commenting, share with anybody that you might know that's also trading the strategy. And without further ado, I'm excited to continue trading it and continue documenting my journey with it. And we can grow together along with this process and master the skill, master the strategy, and take your trading to the next level. And that's all for now, guys. Peace out.